guys can see, this is one of the trades that was sent out on the 12th of March. Okay, I believe that was Wednesday. So if you guys want to reference this back, the trade was sent out on Wednesday. I'm going to type it so that you guys can see it. So the signal was buy gold at 29.11 to 29.07. Okay, so it would have had a TP of 29.12.5. Let's say 29.15 or 16 for the sake of argument. Let's say TP 29.18 and TP open. Okay. Oh, great. Just deleted the whole thing. Let me quickly write that again. Just bear with me, guys. All right, cool. So buy gold now, 29.11 to 29.07. We got TP 29.12.5, TP, if this deletes again, I'm not writing it out, 29.15, TP 29.18, and TP open. Okay, and we have a stop loss of, let's say, I don't know exactly what it would have been, but I'm going to say 29.04. Okay, so this was the signal that was sent out in the group. Okay, so how do you approach this? What is the best way? Because what I want everyone to be on is on the same page. Okay, I want you guys to be on the same page as us. I want you guys to know exactly how to approach the trade. And most importantly, I want you guys to approach every single trade the same. Okay, it's the most important thing. If you guys approach every single trade in the same way, you will be profitable. The reason I can say that with so much confidence is if you just look at our track record this year in 2025, okay? We have had pretty much on average a 90% win ratio. If you average the year so far, okay, this week was 85. Some weeks we've had 100%. Some weeks we've had 92%, but on average for 2025, we have a 90% win ratio. Now, I want everyone to understand that stop losses in trading are completely normal. There's nothing to be scared of. There's nothing to get down about. There's nothing to be emotional about when it comes to a stop loss. The problem comes when your stop loss wipes out all your profits and then maybe even more of your capital. And I'm going to show you on this call how to ensure that that does not happen to you. But the key is that you must approach every trade the same. Okay, now, the number one mistake that people make is that they change their order size when they shouldn't. Okay, and this means that their account balance doesn't grow. It means that they go around in circles, and it may even mean that you blow your account. Okay, so what tends to happen typically, okay, is that many people, they will set their order size based on how much they want to win, how much they want to make. Okay, so their order size is usually bigger than it should be. Okay, now what they'll then do is when they're happy with the profit, usually at TP1, they are completely out of the trade. Okay, because they've set their order size based on what they want to make. So at TP1, maybe you've made $40. You're happy with that. $50. You're happy with that. You're out the trade. Now, the problem comes if you say, for example, win 3 or 4 trades in a row at that order size that you are happy with. You decide to yourself, hey, you know what? I'm going to increase my order size because now I want to make more. Now, what then happens is the 5th trade hits stop loss and it's wiped out all of your profits and all of your account balance. Now, I want you to put a 1 in the chat if this has ever happened to you, because it certainly used to happen to me, and I wanted to understand, how can I avoid this? How can I stop this happening? What am I doing wrong? Okay, I didn't understand. It didn't make sense, and it was demotivating because the 4 trades in a row that I won, and now all of my trades are blown out from 1 stop loss. And that is what used to make me scared of stop losses, because a stop loss was wiping out all my profits. That's why I used to be scared of a stop loss until I understood this information and applied it. So number 1, keep your order size the same throughout the entire week, okay? Number two, you must approach every single trade the same. So what do I mean? Now, what is layering? That is the point of this conversation before I went off on a tangent. So layering is entering the trade multiple times if the market goes against you, okay? Now, what you want to do is enter within the zone between 29.11, which is the entry, and 29.07, which is the end of the zone. Okay, so these four lines represent the areas that you want to enter the trade. Okay, you've got the stop loss down here at 29.04. Okay, we'll put the stop loss in red. Okay, but it's not important. I'll just leave it because I don't want to take too long. Now, you may find that sometimes the trade fills the entire zone, okay? But sometimes it doesn't. We're going to see how this trade played out. Now, what you can do is you can set something called a pending order, okay? Because if you're doing it manually, probably instead of entering every 10 pips, you're probably going to end up entering like every 7. And then instead of having your one entry here, second, third, fourth, fifth, you might end up with 8 entries. And the problem with that is you're now over risked and you're now over leveraged. So your order size should be based on the idea that the trade entirely fills the zone. So for example, if your normal order size is 0.1, do not enter 0.1 for every single layer, because then you've now actually entered a 0.5 because you've got 1, 2, 3, 4, 5. So you're thinking you're doing a 0.1, but in fact, you're in the trade for 0.5. What you want to do is divide 0.1 by 5 and enter each trade 0.02, okay? Now remember, it may fill the zone, it may not. But if you approach 25 trades exactly the same through the entire week, you will be profitable. Okay, so we're using the replay function. So let's see what actually happened in this trade. Okay, so I believe what did happen in this trade, and this is good that this has happened, it actually hit TP1 straight away. Okay, that's this candle here. And this brings up a very, very good point. Now, if you want to make good money, which I know everyone does, and if you want to be profitable, you cannot exit the position at TP1, okay? It's just not realistic. However, of course, in the group, the message will say TP1 hit, move your stop loss to entry if you wish to be risk-free. Now, the reason we're saying that is to help new people protect their account balance and get in the habit of understanding that they should move their stop loss to entry in order to protect their trade. Now, you can move your stop loss to entry, and if it does come back, then you re-enter, okay? The reason that sometimes we say move stop loss to entry is if the market is particularly volatile, sometimes it might dump through entry by 30, 40 pips, okay? And that way, you can enter the trade at a more favorable position. Okay, we've seen that many, many times. So in this instance, it went straight to TP1. Now, I would not set my TP for TP1, okay? Because if it keeps going, then I still want to be in the trade. And what I don't want to have to do is then jump in late. Okay, so I will only set TP1 if the zone begins to fill up more. Okay, so let's see what actually ended up happening in this trade. Okay, I don't know if it came back because I don't remember off the top of my head. Okay, see this here? This now should have triggered the second entry. Okay, if you set a pending order, it will do it automatically. Okay, so if it's 29.10, then maybe set it for 2910.3. Okay, so I'll write it down so you guys can see 2910.3. That's where you want to set your second pending order or your first pending order because you already entered the trade one time. Okay, so the trade played around a little bit. We're going to see what ended up happening. Now, in this scenario, it did take off, as you guys can see. So what you would have is one of your original entries still in play and the second entry now in play. Okay, now now we're here at TP2. Now the rule that you guys want to follow is TP2. It is all about TP2. Okay, TP2 is everything that you want to pay attention to. Once the trade hits TP2, do not continue to layer the trade. Okay, once the trade has hit TP2, move your stop loss into profit or entry, whatever you're happy with. This setup is now complete unless we specifically tell you re-enter the trade. Okay, so for example, let's say that the trade came to, I don't know, TP1 or even halfway through. Let's say that the trade ended up here, okay, and then it reversed. Now you can layer, continue, let these orders fill, let the market take them out and keep playing the trade, okay? But once it hits TP2, the trade is done, okay? So you almost want to forget about TP1 unless if the trade fills every single layer or 2 or 3 of the layers, that's when TP1 becomes relevant, okay? Because from 2907 to TP1 is 52 pips, okay? Or 55 pips. That's why TP1 is there. TP1 is there if the trade fills the entire zone, okay? Because if it fills the entire zone and then reaches TP1, there's a strong chance that it can reverse and keep going back. But at that point, you've got your stop loss to entry on every single one of your positions, okay? So Bradley will cover this again because sometimes things said in 2 different ways. You know, I might make sense to some people. To some people, I might not be making sense. And when Bradley says it again, it will clarify it to everyone, okay? But as long as I've said it, I can go to bed happy because I'm 4 hours ahead and I've got a 5:30 alarm. So I really hope that makes sense to everyone. The key is layering. TP2 is what you want to be aiming for, okay? Once TP2 is triggered, do not continue to play that trade, okay? Leave that trade now. Let it go to TP3, TP4, start securing partial profits along the way, and then leave it there. Okay, we got 200 people on the call right now, which is amazing. So congrats to everyone that is on. Okay, so let me just refresh my memory. So what is layering covered? How should I layer? Okay, how should you layer? Every 10 or 15 pips. It depends on your risk management, okay? So the way that you want to calculate it is from your first entry, okay, I'm going to write this out again. So from 2911, okay, to the stop loss at 2904, that is 70 pips. Okay, so I'm going to tell you how to calculate your risk. From 2910 to the stop loss is 60 pips. From 2909 to the stop loss is 50 pips. From 2908 to the stop loss is 40 pips. And from 2907 to the stop loss is 30 pips. Now, when you add that up, okay, you've got 70 plus 60, which is 130, plus 50, which is 180, plus 40, which is 220, plus 30, which is 250 pips in total. Okay, that is what's going to be in the trade if you are fully layered. Okay, now let's say, for example, that your order size is 0.02. Okay, let me just work this out because my maths is not that good. So I believe, correct me if I'm wrong, that's a total of $50. Bradley, is that right? Thumbs up if am I right on that one? Yeah. Okay. Perfect. So Bradley is listening, ladies and gents. He's with us. So $50 is what you would be risking in the trade at 0.02 if every single layer is filled. Put a 1 in the chat box if you guys understand. I can see it. You can't all each see it, but I can see it. So again, Bradley will cover this because it will probably make more sense when you hear it again. But at 0.02, okay, the reason being the first trade, 70 pips. If that hits stop loss at 0.02, it's $14. This one is going to be $13. This one is going to be 12. This one's going to be 8. This one's going to be 6. When you add it all up, that will be $50 if every layer fills. Now, if that's not comfortable for you and it's too much, very simple. Either reduce your order size or reduce the number of layers. Okay. For example, you can layer every 20 pips. So forget about 29.10. Okay. Forget about 29.08. You could just do 3 layers. Okay. Now you've got 70 pips, 50 pips, and 30 pips, which is 150 pips now. So on 0.02, you would now be risking like $30. Okay. So less, or you can just reduce your order size. Okay. So think about for yourself, what is a amount that you are comfortable to risk per trade? Don't base your order size on what you want to win. Base your order size on what you are comfortable to lose, and you can never go wrong. So the third question was, how long should I hold the trades for? The answer, TP2 is when you should not continue to re-enter the trade. As long as it hasn't hit TP2, continue to play the trade applying logic. Okay, what do I mean by applying logic? If you've already made a bunch of money in that trade, get out. Okay, if the trade hit each of the entire layers, okay, then just get out early. Okay, so I don't want anyone to put a gun to my head and say, but you said on Sunday, hold every trade until TP2. Apply logic. If it filled the entire zone, okay, which is 29.07, TP2 is then 80 pips from the bottom of the zone. So if you get 60 pips from the bottom of the zone, 70 pips, walk away. Okay, once you've made a comfortable amount of money from the trade, walk away. If there's news around the corner, okay, then walk away. And I'm going to show you how to check things like that, and we'll also keep you up to date. So the next one was, how do I know whether to re-enter the trade or not? We've covered that. TP2, okay? What lot size should I use? I believe I've covered that. Use a lot size based on what you are comfortable to lose, not what you want to make. Okay, now, if you do hold the trades, the winners, you guys see the statistics. Okay, so this week we had 19 trades, a lot less than normal because gold hit a record high. Okay, $3,000 per ton of gold. It was unbelievable what we saw this week. Okay, so in this week, we had 3 trades that hit stop loss and 16 trades that won. Now, you guys can see I purposely wrote, and Bradley purposely wrote in the group today, the number of pips that the winning trades did. Okay, the average is like 80 to 100. 80 to 100 pips is the average of what the winning trades did. Now, sometimes we may enter a trade and it takes off and it goes 100 pips with no opportunity to layer. Sometimes it will layer fully and it might even go to stop loss. Sometimes it will layer fully, it will come to TP1, TP2. But if you approach every single trade in the same way, then you will be fine. Okay, then the last one, how do I grow my account balance? Is very, very simple. On a week-to-week basis, okay, you should not be changing your order size throughout the week, okay? Don't get excited when you hit a big win and then increase your order size. Don't get deflated when you hit a stop loss and decrease your order size, because if you do either of those things, it's highly likely that you're going to get caught out and you're not going to get the desired results. Now, we can look at something really interesting here. Okay, so say, for example, 19 trades this week, 16 wins, 3 losses. Now, let's say on a worst case scenario that losses equals 5%. Okay, so that's minus 15% from the losses. Let's say on a very conservative level, okay, like I'm talking super conservative, like let's say that the wins only represent half of what the losses do. Okay, so that's 2.5%. Let's say that the trades don't layer, you only hold them a little bit. 2.5% times 16 is 40%. Okay, so if you look at that, that's 35% profit this week. If you approach the trades the same and you hold the winners and you keep your order size the same and you layer exactly the same, okay? 10 pips or 15 pips. Now, we can even make this even worse, okay? Let's just say that the 16 trades only do 2%. That's still 32% from the winners, which would be 27% profit this week, okay? We can even make it even worse. Let's say 16 times 1.5%, okay? That means that the losses are massive compared to the wins, which they shouldn't be if you follow were on 1.5%. That's still 24% minus the 15%. You are still 9% in profit, which is amazing. Okay. Trading is a percentage based game. It depends on your account balance, but it's the percentage which is important. You're not getting 9% on a week to week basis anywhere else. And that is on the scenario that the losses are nearly 4 times bigger than the wins. Okay, so this is what you want to bear in mind. And if you bear this in mind, you will not care about stop losses. They will not affect your account balance in any way, shape, or form.
And again, I'm going to go through this just from my visual kind of breakdown. So obviously, if we know that the entry is here at 2911, right? So 2911 is the entry point. We know TP1 is here, TP2 is here, TP3 is up here. Oops, it is. TP3 is here, right? So if we know that, these are the entry points. What we're then looking for is from a financial perspective, we know that TP1 isn't going to be that much money on the table, right? Who agrees that when you hit take profit 1, you're feeling a little bit meh? You're like, I've only made 7 quid. I've only made 70 pence. I've only made, a little bit of money. And the little green monster in you kicks in again and makes you think about re-entering the trade. It makes you think about adding more trades. It makes you think about, a little bit more. So if we know that if we just play this out, so we'd have entered the trade here, just hypothetically, right? We're then going to go into the trade. The second trade would have triggered, the third trade would have triggered, fourth and the fifth. So as we can see here, we've now got 1, 2, 3, 4, and 5 trades. If it goes down here, we're shit, we're fucked, we've lost money. So then when we push up to here, we now have a 10 pip difference on each of these. So as James just broke down. So if it goes from here to here, it's 15 pips. From here to here is 25 pips, 35 pips, 45 pips, 55 pips. So for me personally, if this fully layers, as James said, that there, let's just say that this was the entry, just hypothetically, right? Then there's no issue with closing at TP1 because you'll have banked 55 pips, 45 pips, 35 pips, 25 pips, and 15 pips. You're good, right, on that specific trade. But for me, this is where eventually you guys understanding some of the more deeper stuff that we're going to break down. So if I go to this on a chart perspective, it's a little bit more difficult on a bigger, on a as the markets are right now. They're currently at a point where, we're at all-time highs. But if we see and we can just understand certain levels that get hit over and over and over again, okay? I want you guys to start understanding it. And I never want you guys to do chart analysis. I never want you guys to understand. But again, if you do ever do this, you can see over and over again, the market hits key areas. So if we know that, when we go down onto the smaller time frames, you see this gap here that I just highlighted? It took me 4 seconds. We can see this bit here is a strong area that's been hit before. So statistically, based off take profit 1, that is going to come and hit there. But look at the next point above it. We also highlighted this bit that got hit over and over again. Just drop a 1 in the chat if this is making sense. So we know that TP2 in this scenario could get hit. Also, TP3 is around that zone too. But then what do we see all the way up here, right? Another huge part off the 4-hour time frame. So this is where eventually you guys will get good at seeing what's going on over and over again. So we see this bit here, rejection, 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 okay? But then we've got this bit up here, okay? This higher bit. So if we now know that that's the case, we potentially could go all the way up. And this is just, again, you guys get into a comfortable position with inside trading where you can do this. So we see there, look, boom, it had taken us 5 hours.